I am a member, was a member of Duolingo, and I have used it for some time. Actually, I should be learning three languages on this platform, but I'm not. Um, I want to learn French. I want to learn Spanish. I want to learn Brazilian Portuguese. Actually, I want to learn Spanish Portuguese, but they don't offer that. But so I joined Duolingo, and I have done some world traveling. And the reason why I joined Duolingo, the platform, wasn't because I wanted to learn a language. It was because I just love learning for fun, and Duolingo is a really, really great platform for learning as a enthusiast who wants to be a polyglot, and polyglot means speaks many languages. So he took my chair so you can't see my junky background. Anyway, so um, as a language enthusiast and a lifelong learner, I want to learn as many languages as I can, and I want to be fluent. And um, I really like Duolingo because it's fun, it's easy, and if you do not do your lessons, they will harass you. You will get all types of pop up. They will wake you up out of your sleep, send you alerts at 3 o'clock in the morning. They will shake you down and make sure you do your lessons. So I love Duolingo. It's a really great platform. So that is my disclaimer for everything that I'm about to say now, because it's going to get ugly. So, in preparation for this article, I researched the stock. Of course, I pulled up the Google Finance and I looked at its stats. Then I did all the due diligence that I would do if I was going to buy a stock. But since I had uh, former experience with this company, I decided to go into the news and see what the news was talking about. And Duolingo is not the type of stock that I would invest in because I'm not really big into online only digital platforms, learning. Uh, I'm not into investing in any of that because I don't really see recreational learning as any type of bonus or special thing that really people are really driven to. Now, I underestimated the power of online learning, especially going coming out of 2019 and going into this pandemic. And what I'm thinking is during the pandemic, a lot of people decided that they were indoors and they just didn't want to melt their brain away, watching Netflix or watching stories or playing video games, and they wanted to take up some educational time. They wanted to sharpen their brain while they were in the pandemic. People like me said, I want to learn another language while I'm indoors because I can't travel now, but when I get to travel, I will be able to use this language. And that's really, really awesome. And it was a good strategy. So if you purchased a share or a couple of shares of Duolingo going into the pandemic, you are awesome. And if you tried Duolingo or Babbel or Rosetta Stone during the pandemic, shout out to you. That is awesome. You have what they call Drive. You have the Hookspot and Spunk and Moxie and all of that stuff that doesn't show up on a drug test. Yeah. So in my research of the news, I found some pretty recent articles, and the first one I pulled up was from August 20th, 2021, and it said Duolingo is riding a wave of language learning, but Duolingo stock is too high. And basically, from that headline, you can already tell that they are going to be criticizing the current stock price of Duolingo. And this is a stock that has recently done an IPO within the last year, I believe. And sorry if I get that wrong. I wasn't really focusing on the IPO date, but anyway, basically they're saying the same thing that I said, and they're confirming what I said. Duolingo should have done well during the pandemic, and they did well during the pandemic. So that's awesome. They're saying that this company The company went public on July 26th this year, raising about $406 million at $102 per share. This was on top of the 114.6 million it already held, giving it a total of $580 million in cash. So, just looking at that, this company is awashed with money. They have a whole lot of money floating around. And this article is from Investor Place and it's written by Mark R. Hake, and he's a CFA. So I really respect anybody who has an initial behind their name. But just looking at that, it's really surprising that, I mean, who would have thought that Duolingo would be $100 stock, and that's what they will be going for. But it's insane that the company, raised $406 million, and they already had about another $100 million sitting in the tuck, just waiting to be spent. And this company just has a whole lot of cash. I am surprised about that. But with a company like Duolingo, you need a lot of cash because I bet they are spending a whole lot of money on research and R&D. And if you read further in this article, that's what they say, Duolingo, that they spend a whole lot of money on research and development, and that their customer acquisition prices are a little bit high. And basically, Duolingo operates a freemium business model. And they said only 4% of their users are actually paid subscribers monthly or annually. And in addition to that small amount of money, all of that advertising, you know, advertising is really driving that. And they have a small amount of money that they raise from English tests. So I believe that they're using their platform as a ESL platform. So they're teaching people who don't speak English how to speak English, and they're giving them tests. And I think that's awesome because if you're dependent on customers like me who can't even finish one language and start three, and then quit for a year and then hop back on for maybe 4 months and then quit again, you won't really last very long as a business. So kudos to Duolingo for having, tapping into the ESL, English as a second language market, and providing tests for English and reading comprehension and things like that. So that's really awesome. They said last quarter, this company made $58.8 million in revenue, and that was 47% higher than the same quarter last year. Reading that, I was super surprised, and this company seems like it can do no wrong, or maybe they just IPO'd at the right time. And that's one thing that you need to realize when you're looking at companies who are recently IPO'd. Like, they may have decided to go public to offer their stock while their stock was actually looking really, really good. Like I said, they're coming out of a pandemic. People, they have a high subscriber and user base right now because of people being indoors. So maybe they decided to go public last year, just realizing that, this will be our best year ever. So if not now, then when?